Hello, YouTube, and welcome back to the close of the month. The big question is, are we going to be getting a hard or soft landing? And what I'm talking about is what the expected trajectory of the S&P is going to be from here. Soft is going to mean up, meaning that the lows are in, and hard is going to mean down. And I want to try to do my best to try to keep the video very short today and to give you actionable insight. So if you're enjoying the video, now we're after the fact, I would really appreciate a thumbs up. We do videos literally every single day. And again, I would also appreciate if you could drop me a comment and let me know what you think. Are we going to go for a hard or a soft landing? And the reason why this is so important today is because we eked out, I'm using that word intentionally, eke. We eked out a gain here. We don't have the official market on close yet, which usually will settle at about 415. I'm recording at 409. So as of right now, the closing price is 413.13. That is $1.13 above the May close of 412.00. The reason why this is so important is because we had a big meeting today. And we all know that on a pattern like this, when we get a doji means indecision. So indecision after going down for basically the whole year, does that really seem so bad? I don't think so. It means that we are now unsure whether we want to resume higher or whether we want to resume lower. And I think that the market is correct in basically closing unchanged. We can also note down here that we actually have green volume because we closed the green out month, closed the monthly out green. So this is so important because whichever way we start off June, which is going to start tomorrow, but more importantly, where we close the week out, are we going to close the week above or below? I think that is going to be our clue as to whether or not we get a hard landing or a soft landing. And I think there's less value in trying to predict which way we're going to go. I think there's more value in trying to be prepared for both. So for me, I have some very important levels I will be watching for as we go into the new month. For us to go green, I would like for us to be at a new weekly high. So a new weekly high for me is going to be, so far we got 416.46. I would like to see us higher on the month just to confirm that we're actually going higher and that the pressure that built up last week going into the close of the weekly is actually going to start releasing. Because if we can't get back above these key lows here at roughly 415, right, 415.79, 415.12, how are we going to get to the 50 DMA? How are we going to get to the anchored VWAP? And ultimately, how are we going to go higher? I don't know. So if the bulls are really in control, and this is not just a bear-fueled rally, but it's actually going to lead to more upside, I would like to see us close green on the weekly and minimum print a weekly higher high, 416.5. In terms of the bears, key area I'll be watching really close. First one's going to be 412.00, meaning do we actually have a potential inverse head and shoulder setting up here with a low, with a head, and with a low, or do we invalidate all patterns and resume back down? The losing 412 is the start of confirmation. I would say we are confirmed when we pierce below 410.64, which is going to be our Q1 low and also the low we put in February. And if we close below 410, I would pretty much say it's almost inevitable that we are going to retrace and test the low of the month here. And the low of the month is bear market territory. So that's not really a really positive sign if we are bullish. So something else I want to think about today is what actually happened. The two most important people for the U.S. economy met. Jerome Powell was called into a meeting from Biden. And why does this matter? Well, first of all, because it's highly unusual. And then second of all, because we are pretty much forecasting whether we're going to get a soft or hard landing based on what the Fed says. Who's the Fed chair? It's Jerome Powell. So let's look and see what those headlines were from today. So here we can look at and see that, first of all, we can note that what I'm looking at is how is the news interpreting the data that was submitted? And for me, it's pretty mixed. Biden seeks to deflect blame back to Fed in unusual meeting with Powell. Interesting how they phrase it. Stocks erase losses amid Biden and Powell meet on inflation. Bloomberg, Biden-Powell meeting. White House seeking to deflect blame for inflation to Fed. Interesting. So just the way that this is actually phrased here is, first of all, very interesting to me. And the second reason why I find this so interesting is because Jerome Powell is not going to want to be blamed for this, is he? No. But I think there's a reason why they're trying to deflect. So again, not that I know everything, but again, I'm trying to understand what's happening. So next thing to look at here is going to be, why would Joe Biden try to be deflecting blame? Oh my God, it's because his approval rating is at the lowest of his presidency. Whoa. And, right, he's a loser. That's why he's holding up two fingers here. He looks like a total loser. According to the American people, that's an L. He's a loser. And it's important because the midterms are coming up in the next 6 months. So if he's at the low of his presidency now, what's he printing? A new lower low. So it's going to be very hard to go from the least popular to now we like you in the matter of 6 months. I think it's a very big uphill battle. Second reason why this really matters is because we got Fed speakers this week. So we're not going to hear from Jerome. There's no commentary from Jerome. The White House puts out what they talked about. But what we do have is last week we heard from Bostic, who was telling us that there is potential for us to pause in September. And again, on the weekend deep dive, we went back through what a neutral stance would be. I encourage you to watch the video at the end if you want to know more about that. But then yesterday, we had Waller saying that actually, I'm in support of 50 basis point hikes at several meetings, not just two, not a few, not a couple, several meetings. So the reason why I'm really paying attention to Wednesday, and the reason why these are both highlighted, is a follow-up to the weekend, where between Bullard and Williams, again, Williams is part of the Troika. He is a dove. He is one of Powell's allies. So if he is striking a different tone, meaning if he is notably dovish or notably hawkish, that is notable. And then over here, the guard dog, James Bullard, again, hawk. Does he dial back the hawkish rhetoric? Does he lay in even harder? And this will be so important because, again, what the commentary from the talking heads, and talking heads are just people on news outlets like CNBC and Bloomberg, they're talking about, again, they're talking, right? They got talking heads. So they're talking about how, Bostic last week said that we can pause. And now we got Waller. The reason why market's down today is because Waller's saying, actually, we're going to push forward several meetings. So between 11:30 and 1 p.m., we're going to be hearing from the most vocal hawk and one of the most vocal doves. So this is very important to me. And then Mester is going to be at the end of the week, and she's generally more balanced. So what's the net effect after we open the month? And again, I just told you the important levels. So it doesn't really matter whether we go up or down because it's the Fed or because of technical price action, because of quantitative tightening. Not really. It just matters where we will be at the end of the week. All right, so just trying to lay all that out so it's very understandable for us. Next thing I actually want to talk about here is whether or not we want to actually, let's go through one more thing here. We actually got the headlines from here. So again, we got all these headlines and just trying to make sure that we actually understand what all this means. So, all right, President met blah, blah, blah. Biden says he congratulates Powell on his confirmation. Biden says they will discuss inflation. Biden says that we need to transition from recovery to steady growth. Biden says he respects the Fed's independence. Okay. Biden says his job is to give Fed officials space to do their job. Let them do their job then. Stop trying to deflect the blame. Biden says Powell has noted Fed has a laser focused on inflation. Interesting. Biden says he looks forward to Powell's continued leadership. All right. So now we know exactly what they were talking about. And what I want to do now is, again, the adage is sell in May and go away. And now the question is whether or not we should have been trading in May, right? We already know May's tough. Sell in May and go away. And was it really worth all the effort to make 93 cents? I don't know. Now the close is official. It's here at 412.93, which means we closed up by 93 cents or 0.23% today. So the question is, should we have been trading? And should we trade next month? And the reason I'm saying that is because I'd be really curious in the comments if you guys could drop me one and let me know whether you would have preferred to have been woken up at the end of May and been told, hey, we closed up by 93 cents. Or would you have rather traded all the way through this May BS where we went from 430 to 380 or a 50-point range and then right back to unchanged here? I think a lot of people got chopped up. I think a lot of people made some miscalculations. So what I'm trying to get at here is that we need to exercise patience. If we want to get paid, we got to exercise patience. And that's going to be really important, notably the first part here where it says you want to get paid. So this is so important because I'm actually going to go to a quote here. patience is very important. And I'm just saying this because, again, I want you to be mindful of what you should be doing, not what you are doing, what you should be doing. I've told you the levels. What you do with them now is really up to you. And now I'm going to defer to a quote from Mark Minervini, a market wizard. Again, someone who is smarter than me. Let's read his quote here and see if it resonates with you and what I just told you. If you want to be successful, the first thing you have to do about trading is learn about trading is it's not a game. It's a business. Treat trading like a hobby and you will get paid like a hobby. Hobbies cost money. So ask yourself that. Am I really putting in the effort required to make money in the market? Or am I just here to have fun? Am I just here to play a game? And for me, this is not a game. This is my business. This is my livelihood. And I take it seriously. I put in the effort required to have an unfair advantage. And I think it's also important for us to be mindful of when the risk justifies the reward and when it doesn't. All right. So now, last thing, since we are closing out the month, let's have a look here at the heat map. Actually, last thing I just want to point out here before we look at the heat map is I want to look at SPY and I want to look at QQQ. So first thing I want to look at on here in SPY is just, again, we know that we're already looking at the weekly, the daily, weekly, monthly timeframes, but before all those confirm and flip bullish, we have to break bullish on the shortest time frame. For me, that's going to be the hourly. So let's delete all the trend lines and see what we have here. Well, if you can't do technical analysis, let's just look and see what we're doing here. Well, we hit the 50, backed off, hit the 50, claimed the 50, rode the VWAP to the 200. So again, hit the 50, right? Tested 1, 2, 3 times. On the third time we break bullish. That's a W. That's the third test classic breakout. And then what do we do? Well, we stop. We go from, first of all, being below the VWAP to actually riding it all the way up. Ride it up, pop. Ride it up, pop. Ride it up, pop. And now what are we doing? Well, we're over the 200. We back tested once, back tested twice with a higher low. And it means that we've now actually claimed that moving average. If we now look at the daily chart, would it make sense for us to shoot up here to the 50 DMA? Oh, it kind of would. And then where's the 200? There's our upside potential. Yes, but we have to start June off bullish. So all this tells me is that the hourly is giving us some momentum on a short time frame, an hourly chart that says that I want to go up. And if we're going to maintain this uptrend, what it means is that we also cannot get back below 410.7. Again, that's that 410.64 area I just mentioned before, which is the key threshold for the bulls. So what all it means is that if we are below 410 by Thursday at noon, it means that we stopped trending up on the hourly, and we will be back below the 200. So that is the classic warning sign that a lower time frame is confirming what we're already looking at on a higher time frame. All right, now since we're looking at the weekly in focus now, let's look at SPY. And again, took out the relative high. Now it's battling for the relative low, which is where these white arrows come from and where we stalled out today. It makes sense that we stalled out there. And again, we have to claim this area if we're going to go up into 420s, 430s, 440s, or higher. Now let's look at QQQ, the key indicator we need for us to go higher. It's got a doji here. It's down by 0.25%. But again, we have to make it up here to roughly 317 to reclaim those same lows that SPY is currently trying. The SPY is already tested. So if the NASDAQ is leading to the downside, what should it be doing? It should be leading to the upside, which means that we actually have to rally by roughly 10 more points or about 3% more by Friday. It's already Tuesday. We got 3 more days left. We got to do 1% a day or we got to have a massive pump. The reason why this is important is because when we look here to what crypto did on the weekend, looking here at Bitcoin, it was in the complete dumpster, right? In the dumps, and then boom, 10% in one day. So if this is still a technical leading indicator, is it possible that we're going to stall out, then we get our 1, 2, 3 day rip? This will be interesting, and it's going to tell me whether or not crypto was still actually a leading indicator or not. And this was just a dead cat bounce. Again, 10% rip on Ethereum too. But it's still stuck inside its range. So when we look here at ETH, hold on. I think I have it on Coinbase. Okay, I don't know which one I have it on here, but we're looking at a demand pocket right here where every time we go below 2K, they buy. And what are we doing now? Inside bar. Doesn't look great. Anyways, let's flip forward. Final thing I want to look at here is actually going to be a heat map. So when I look across the board here, S&P is down twice as much as QQQ, so that still means that QQQ wants to rally, but it needs the S&P to agree. The dollar is up by 0.5%, so I can understand the reason why SPY is down 0.5%. Most ETFs are red. The only green stocks are actually Amazon and Google. Google's really oversold. We looked at that one before, and now we know Amazon. Amazon has a split coming up on Friday, and it's the number one gainer today, up 4.4%. Otherwise, every trillion-dollar company is red. Every ETF that is North American or American is also red. We got EEM, or emerging markets, up, and FXI, which is China, up. So there's a clear theme of risk off again, and it's because some of the pressure got released into the holiday Monday trading in Asia and in Europe. So now what we want to try to figure out is, okay, is Amazon becoming a leader, or is it just recouping losses? Well, since we're closing out a month, let's look at the monthly performance. Amazon's still pretty red. And what else is red here? Apple, Tesla, Amazon, right? What else have we got? Cisco, we got Facebook. So let's go to no sector. Let's just go by weighting now. And Google's actually treading water in the last 30 days. Maybe he wants to be a leader. However, Apple, Tesla, Amazon, Microsoft, those are the biggest stocks inside the S&P. What I would love to see is for these things to actually flip the green. So I'd like for all of them to do what Amazon did today and to actually continue higher. Why? That's going to drag QQQ up. It'll give me more confidence that this is not a dead cat bounce, but an actual reversal attempt. And the most important reason why is because, again, I'll just draw this here because it's impromptu. I didn't have this properly prepared. We're looking at that falling wedge pattern, and we want to know whether or not we're getting trapped or if this is real. So again, there's the falling wedge, and ultimately what we're looking for is an inverse head and shoulders potential. So this would be our right shoulder, this would be our head, this right here would be our shoulder. So what QQQ has to do to complete an inverse head and shoulders to overshoot to the upside so we can land on the right shoulder. And if it can't overshoot now, this pattern is invalid. It has to get above 310. Sorry, roughly 317. So we can ultimately come back down. It will hit resistance somewhere between, 320 and 350. And that is where this move back down can actually land. So I'm going to leave it there. I thank you for watching. And if you have more time and you want to watch more in regards to how I prepare my weekend thoughts, where I go through all this stuff, I encourage you to watch the video that I'll keep up here in a moment. Otherwise, I thank you for watching, and I look forward to seeing you tomorrow. Thank you.